Hey, it's Monday, October 27th. We're going to take a look at the real estate market in Austin and nationally, and we're going to touch on a few things in terms of why we have effectively two different markets going on nationally and locally, and then also what the Fed's poised to do at the end of the week and what's coming up on the November elections. All right, let's take a look at the Austin market, what we've been seeing. This is the city of Austin. We've got an inventory of about 4.7 months, under $1 million in the city of Austin. And then they're selling for about 96% of the final list price. Now that 96% is largely diluted by the fact that there's already been a previous price reduction. So for sellers, that's something to think about when you're getting ready to list your home. And for buyers, paying attention to where the home started, looking at how long it's been on market, and strategically identifying concessions and price adjustments you can ask for is going to help you a lot. It's taken about 85 days to sell a home in Austin if you're under $1 million. But when we get over $1 million, it starts to look a little bit different. We've got more inventory on the market, almost creeping up to 6 months. Over that in many specific neighborhoods. Some neighborhoods we're seeing 12 months, 13 months of inventory. It's so specific to individual neighborhoods and areas and schools and geographic boundaries that it's really important when you're working with your agent that you really narrow down and look at the comps specific to the home you're interested in, or if you're selling a home, to comp it to relevant properties. Commercially, this is interesting. We've got about 26% of commercial downtown office space available, but the pipeline to add more is limited to not much. So with an increase in interest in office space in Austin, by the time the pipeline's complete and we have new office space, the expectation of having that 26% largely rented out is there. So we may see office space going up in 2026, and that will be driven by more work, more office workers going downtown, and that will affect the residential market as well. Okay, so let's zoom out, look at the national picture. It's generally being reported that the national real estate market for residential properties is in pretty decent shape, but you got to remember, this is a very big market. It's enormous. As we say, I wouldn't ask what the average weather in the United States is and walk outside according to that here in Austin. I'm going to say, what's the weather in Austin? So take it with a grain of salt when we're looking at national data. News outlets, everybody's kind of creating and presenting a pretty rosy outlook on the national housing market, but that doesn't tell the whole story. There are two segments that are being affected quite differently. We have the subprime and the prime borrowers. Those in the subprime market are having a greater challenge in attaining loans. In fact, so much so that we're having a very high default rate on automobiles for those in the subprime market. Economically, that's a troubling signal. It shows downward pressure on jobs, earnings, savings, credit scores, how much credit's extended right now, debt to income ratio. So those that would be in the subprime market are challenged right now to get into housing. They're at risk of losing automobiles, that sort of thing. It's not a real good signal for the overall health of the economy. In the prime market, prime borrowers, they're doing fine. In fact, they're doing so well in terms of borrowing and being able to access cash from banks that Fannie Mae has upped the sales outlook for next year in terms of homes and mortgages. They've upped it from 4.5 million to 4.7. That's a significant increase. It's not enormous, but it's enough of a positive trend from prime borrowers that they feel like we're going to see more sales next year. Additionally, generally nationwide, we expect about a 1% increase in appreciation. Remember, it's very specific on where you live. Take that with a grain of salt. Okay, so let's take a look at the Fed, what they may be doing later in the week. We've got an announcement coming up, and a lot of analysts say that we are to expect a 25 basis point cut to the Fed rate. I'm not sold on that. I believe that with limited data available to them, I don't think that they would be in a big rush to cut rates when it's going to be a lot harder to raise them next time. So I think they're going to probably stay where they are. Reasons for a rate cut would be that Fannie Mae has increased their estimates for next year's sales going up. We just talked about the prime borrowers on that. That would help with that. Downward pressure on the employment reports. Unemployment's not really getting better. If anything, it's getting a little bit worse. So that would also justify a downward rate cut. But on the flip side, we've got CPI reports showing that we have very sticky inflation. We're around 3%. Some estimate that we're going to be down about 2.9 by the end of the year. You know, that's not a huge impactful difference, but it is towards the goal of 2%. But you can't balance unemployment and inflation. It's two conflicting directives that the Fed has to maintain and manage. So we'll see what happens with their interest rate cut at the end of the week. But the fact of the matter is, even if they cut interest rates, the Fed rate, that doesn't necessarily change the mortgage rates. We expect the mortgage rates to be 6.3 to 6.5 for the rest of the year. They're going to stick around there. Maybe by the end of 26, we're looking at 6%, maybe just under. So mortgage rates aren't going to be making any big changes anytime soon, which is certainly going to not be helpful for subprime, but for prime, they may get used to it and continue borrowing, which would help spur up prices and values in homes. All right, so let's look at some of the top stories in the news today that are going to affect you as a property owner or potential property owner, or if you're thinking about selling, or you're doing some family planning in terms of how to manage an estate. This is going to be important coming up on the November election, but let's start with the commuter rail. Travis County has just approved a study of a dedicated commuter rail between Austin and San Antonio, which is a pretty big deal. The commuter rail would provide opportunity for people to live in the city they want to live in or the town. They get back and forth, commute to San Antonio for work or Austin or in between. It would really change just the profile of the Austin-San Antonio corridor, which has been a very hot topic for years, and that section of growth is going to increase quite a bit with a 7 million estimated population by 2030. So that's a pretty big deal. On the ballot coming up, we've got three big things, actually four. We've got Proposition 11 and 13. So combined, these two would increase your homestead exemption, right? So you have a $100,000 exemption now, it could go up to $140,000, which is impactful. And it would also lower your school property tax bill, both of which would help with your property taxes as a homeowner. And then we've got Proposition 8, which is not necessarily specific to real estate, but it certainly involves it. And this would permanently ban the state from ever creating an inheritance tax. So if you didn't know, when you have somebody pass that is leaving you an inheritance, the state takes its cut, the feds take their cut, and you're left with that after taxes. So this would make a big impact on anybody in Texas that has a generational wealth plan, inheritance planning, estate planning. That's a big deal, Proposition 8. And then of course, Prop Q coming up, which would either increase the maximum cap of our property taxes to 20% for non-homesteaded properties, or if rejected, it'll leave it the same at 3.5%. But one thing's for sure, your property taxes are going up. Just by how much? And south of us, in between Austin and San Antonio, back to the corridor, Lennar just got the go-ahead for a 2,900 home project there. From a home standpoint and providing more places for people to live, it's good, helps with affordability. Environmental standpoint, there's some things that people are in disagreement with in terms of water discharge. If you want to know more about that, let me know and we can hit you with some more information. That's a lot of information. We went from Austin to the national outlook, back to Austin projects, upcoming election, and things to vote on and consider in terms of propositions. If you want to know more information, hit us up. And as always, if you're interested in learning more about a property you own or are interested in, reach out. We'll set you in the right direction.